Canal Plus has made an offer to buy out Multichoice. The French company plans to put down a cash consideration of 105 Rand per share for the DStv operator. This represents a premium of 40% to Multichoice's closing price yesterday. And at the firm's current market cap, this would put the deal's value at 46.5 billion Rand. Canal Plus says its ambition is to create an African media business with enhanced scale. It's also indicated that its ultimate goal is to then obtain a listing in South Africa. Glencore has reported lower copper, nickel and cobalt production in 2023. And the miner and trader has signaled a further decline in output this year. Copper output fell 5% year on year, and the group expects production of around 1 million tons in 2024. This reflects the sale of its cobalt mine in Australia. The firm produced over 97,000 tons of nickel in 2023, which was lower than its revised guidance in October. While cobalt output stood at 41,300 tons. For next year, it expects production of the resource to be between 35 and 40,000 tons. Copper, nickel and cobalt are materials used for electric vehicles, which are a key part of the global energy transition. It's been a poor start to the year for local manufacturers. The ABSA Purchasing Managers Index fell to 43.6 index points in January. That's from 50.9 in December. A statement from ABSA says this is worrying as the decline comes off the back of a sharp deterioration in demand and activity. The Business Activity Index plunged to 37.1 during the month, while the New Sales Order Index fell to 37.2. New vehicle sales continued their downward trend in January and registered a drop of 3.8%. This marks the fifth consecutive month of decline. NAMSA CEO Michael Mabasa has cited the lingering effects of cost of living increases, along with dampened consumer and business confidence. Mabasa has added that the country's port challenges and persistent load shedding continue to undermine the new vehicle market's recovery path. Further afield, Deutsche Bank plans to cut 3,500 jobs, buy back shares and pay dividends in its latest pitch to investors that its turnaround remains intact. Let's take a look at this package report for more.
Big job losses are coming at Deutsche Bank, 3,500 to be exact. That was the announcement from the German lender on Thursday. The bank also offered to buy back shares and pay dividends as it tries to show investors its turnaround from years of crisis is on track. The bank had already announced plans to cut jobs, but this was the first time it had put a number on the layoffs. It's the equivalent to just under 4% of its global workforce of about 90,000. The share buyback and dividends will total $1.7 billion and take place during the first half of the year. The bank also raised its forecast for revenue growth, and its shares rose over 4% in early Frankfurt trade. The announcement came with its report of a 30% drop in fourth quarter profit, which beat analyst forecasts. The drop came as restructuring costs and other one-off expenses outweighed revenue gains, but the fall was not as steep as analysts feared. Net profit attributable to shareholders was $1.36 billion in the quarter. That compares with profit of $1.9 billion a year earlier. Full-year profit fell to $4.54 billion from more than $5 billion a year earlier, but also beat analyst forecasts.
And Shell announced a 2023 profit of $28 billion, marking a 30% decrease from the previous year's record. This is attributed to a cooling in oil and gas prices. Despite this decline, the company was able to raise its dividend by 4% and prolong its share repurchases. Here's more detail in this package report.
Falling oil and gas prices hit Shell hard last year. The energy giant reported a profit of $28 billion, down 30% from a year before, when energy prices reached record highs. The British firm also reported fourth quarter net profit hit $7.3 billion. That was beyond analyst expectations, but again down from $9.8 billion a year earlier. Strong liquefied natural gas trading results helped offset weaker refining and oil trading numbers. Shell lifted its dividend by 4% from the previous quarter, up by a fifth on an annual basis. But there was a worrying sign for the firm. Shell's free cash flow fell to $7 billion in the fourth quarter. It was the lowest in 2023 and less than half the previous year's total. Shell is the first energy major to report full-year results for 2023. Shell shares were up over 2% after the update.
And the car industry seems to be embracing the AI fad, with VW considering to create its own artificial intelligence lab. Let's cross over to our reporter Ndawling Luchela for more.
Well, Zinati, as you rightfully said, the German automotive giant is in talks with tech firms about creating new digital prototypes for products and features using AI. And joining me now with greater insights on the move is DW correspondent Ikram Ikichi. Thanks for your time today. Now, Ikram, let's get straight into it. What are VW's plans for integrating AI into its operations?
Thanks for having me. Volkswagen has founded a new artificial intelligence lab to generate new product ideas, including possible cooperations with companies in the technology sector across China, North America, and Europe. The company aims to generate early-stage prototypes in areas like AI-optimized charging cycles, predictive maintenance services, and voice recognition. Volkswagen said exploratory talks with tech companies around the world on initial projects are already underway. We are yet to see further details, though, in the coming days or weeks. What we know so far is that Volkswagen's new AI lab will not be housed inside the company's software unit CARIAD or any other specific brand. Volkswagen representatives expect the AI lab to move faster than other processes within the company would. The company said the supervisory board of the lab will include representatives from carmaker giants Volkswagen, Audi, and Porsche. Last but not least, as we know, earlier this month, the company announced that it will incorporate ChatGPT into the infotainment system of its cars. It seems that we are in for a ride with AI-supported cars in near future.
What about VW's rivals? Are there any other competitors turning towards artificial intelligence?
Indeed, yes. Also this week, Peugeot announced its plans to use ChatGPT to improve the voice assistant in its cars and vans. The French company will launch a pilot version of the ChatGPT service, which will be able to connect to vehicle controls and answer many general and navigation-related questions in 5 countries in Europe. Those countries are France, Britain, Germany, Italy, and Spain. Peugeot is planning to turn this service into standard equipment sometime this year. Last week, Peugeot's parent company, Stellantis, announced that it acquired the artificial intelligence framework and other assets of tech company CloudMate to support the development of its smart cockpit platform. Finally, already last year, Mercedes-Benz started a trial in the United States, allowing the drivers to use ChatGPT to get more natural responses to inquiries ranging from destination details to dinner suggestions.
And how is this AI drive expected to influence the automotive sector in the near future?
Well, automotive and AI coming together, possibilities are endless. Artificial intelligence technology's reach within cars seems to be as widespread as others. In-car assistance, navigation production, logistics, and even advertising are just a few examples of areas already undergoing AI enhancement. Let's take this exciting example, for example. Tech giant Google recently confirmed that AI will allow Google's driving assistance service, Android Auto, to summarize long text messages or group chats on the road. Google said the system will be able to suggest relevant replies and actions without the driver needing to touch their phone. All this tells us one thing: AI will soon become an integral part of the cars in the very near future.
It'll be interesting to see how AI plays out in that sector. We'll definitely catch up with you again if there are any updates. That was Deutsche Welle's Ikram Ikechi joining us from Berlin.